and the froth or the hype in equities had just gotten ridiculous. So ridiculous that fear indexes were rising as prices were rising. Okay. Then crypto made this big move, and you noted that, Uniswap volume became bigger than Coinbase volume. Now, when I heard that, I set the thing with equities aside, and I thought that meant the bid in crypto would switch over into the bigger coins, like the stuff on Coinbase. All right. When what actually happened was, when Uniswap passed Coinbase, that was like the sign of the ultimate FOMO, unfortunately, right? And then I don't know if you've ever done this or if anybody who's out there has ever traded, this has ever happened, but as soon as I put the newsletter out, like as soon as it hit the presses, I was like, oh no, this is wrong. Because we had a lot of work that showed like the big coins in crypto should have gone up. And as the rule goes, if something should go up and it doesn't, what's it going to do? Well, of course, in the crypto universe, it means the bottom's going to fall out. So I had to rework all the analysis quickly, right? Because when equities turned, crypto went with it, right? And crypto became like this vicious cycle. So for example, everyone likes it when something in crypto moons, when it goes from 50 cents to $5. Well, that happens because there's no sellers, right? There's no short sellers. Then in this situation, when the market comes down like this, there's no short sellers to buy the market. So it kind of free falls. So what goes up one way can come back down the same way. All right. And believe me when I tell you, trying to use the premium chat room that we have to keep our customers updated, essentially saying, okay, take that last report, throw it out the window, and here's the new plan. Mm-hmm. So I was like on a sailboat and a storm came and I had to run to the other side of the boat to change the sails to pick up the wind. At the end of the day, this looks like a really classic flush, right? Like people did get wrecked and our heart does go out to them.
Yeah.
But this is an ideal value investing environment. So that's how I give you like the overall big picture.
Yeah. So I would say definitely textbook value investor time. But first off, just want to say thank you, Bill. You were burning the midnight oil, working pretty much all day just to make sure that our customers were just having information, because the market was moving so fast and people had so many questions because whether it was TA or the price predictions. So first of all, just thank you, Bill, for working on weekends. Because it felt like you were in the private chat almost 24/7, just answering questions. Now, kind of my perspective on this. Yeah, so first of all, I have two takes, right? The first take is with the price prediction models and the indices, and the other take is just kind of in general with the market, right? So kind of beginning big picture first. Since beginning of August, when our monthly price prediction indices basically said they were putting half of their money into stablecoins, that's when we said, okay, you know what? It looks like we're really getting too bullish right now, right? Because basically, I would say since August, but also with TA, we've been telling people to take profits, and that's something we'll keep on telling people, especially when things keep on going up. You definitely want to take some money off the table. So if you happen to take profits in the last few months, definitely kind of pat yourself on the back, because that's definitely a good sign. If you weren't able to take profits, that's definitely unfortunate. And we're here to kind of just guide you and just try to really give you a way forward, going forward, right? Because when the market corrects 40%, 60%, after it's been going up like 5x, 10x, having that perspective, it's not so bad, right? But that being said, though, we know lots of people, lots of newbies entered crypto and maybe didn't take profits. Or we know lots of new people entered the space a month ago and bought the top, right? So we're here to kind of really give you guidance and try to figure out a way forward. Right now, in terms of the indices, quite frankly, I am also pretty upset with myself because the price prediction indices for a second month in a row basically had half of the portfolio in stablecoins, to a point where lots of people began kind of complaining to us, telling us why they're paying for an index to have stablecoins. And I'm upset with myself because I allowed a few people to kind of, well, I would say I allowed some people, right, part of our customer base, to influence us to take out the price prediction accuracy filter to kind of be less strict, because we felt, okay, maybe the index is being way too strict and it's not really letting people partake in this bull run. But shortly after, 2 days later, the market just goes, and we were like, damn, that index was right. But unfortunately, we had changed it, and now it had almost all altcoins, right? So definitely my fault on that. I basically sometimes should not try to override the AI. But with that being said, though, I think in general, we can probably do, I think on this live stream, we'll go through and try to kind of show people how we view the market using token metrics, right? Because first of all, the AI is good. Pretty much almost every index we have is still outperforming the market and Bitcoin. And then we've also made a major update, because lots of people kind of getting feedback from our audience. Lots of people were saying that the ROIs on some indices began earlier because we had different dates for Bitcoin and different dates for everything. So as a result, last week we also have normalized all the indices to begin at pretty much around the same dates. So as opposed to beginning from April, they all begin either end of June or beginning first week of July. So now it's easier to track the ROI. So everything now kind of begins from zero and it's easier to track. But in general, just to kind of go back up to a value investor approach, now is the best time to buy. I mean, now I'm not saying go out there and buy ASAP, but I'm saying now is when you really want to start looking to buy, right? Because we already have some cryptocurrencies that have bounced back. So for example, a cryptocurrency we talked about earlier, I would say last month, UMA, which was a cryptocurrency our team is pretty bullish on from a tech perspective. Now, I'm not saying it's the best technology out there, but in terms of what it's doing in the DeFi space, it's one of the more interesting DeFi projects to keep an eye on. And ever since we talked about it, then Coinbase kind of announced that they were planning to list it, because UMA has done a 16x. Then during the crash this week, when I saw it pull back, because I think one day it dropped 48%. And I was like, holy cow, right? Because I've been looking to possibly get into UMA. When I saw that, I'm like, okay, hopefully it keeps on getting lower and lower, and maybe I'll get in. But today it's basically a top coin. So today it's bounced back. Let me just pull up the ratings here real quick. So just checking token metrics today. So if we come in here to token metrics, so in general, from a TA perspective, monthly TA, most of the altcoins and most cryptos were still bearish on, but the few cryptocurrencies we're bullish on at the moment are the ones that have really gone up, right? So we see UMA, Token Metrics TA is bullish on it, and it's up almost 35% today, right? So it looks like lots of buyers have swooped in to buy the dip. Now, whether this is just a temporary dead cow bounce or whether crypto keeps on mooning, or who knows, but I think in general, looking at this list, these projects actually do, at least to me, I think these are pretty decent projects, because UMA and Cello, I believe is how it's pronounced, both of these coins were added on Coinbase, right? So these coins definitely do have good fundamentals, and it's very interesting that they have kind of already bounced very quickly, right? And it's also pretty cool that the TA was able to pick that up. But in general, I think people have to really have a value investor approach, right? Because everybody talks about how they missed a DeFi pump or how they missed this coin and they wish they bought it earlier, right? Everybody wants to buy something cheap. But if you really think about it, to buy something cheap, kind of, I've talked about this before. You have to buy when there's blood in the streets. The best time to buy is when everything is going down. And that means you have to really have nerves of steel, right? Because we have so many people, whether in the public Telegram group or the private Telegram group, telling us, hey, I mean, everything's going down. Is now the time to get out of the indices. Is now the time to sell and go on the sidelines. But I mean, as a value investor, that's the opposite of what you want to do, because you want to buy low, sell high. And by selling when things are going down, by definition, you are not doing that. Like, you're basically buying the top, and right. And I think to really hit that home, you have to buy low, sell high. And it sounds very simple, but it's very hard to do because the psychology it takes. You have to, by definition, you have to go against the grain. You have to buy when everything is going down, right? Because I would say one of the best times for our ratings and the AI this year was during the pandemic, when cryptos like Bitcoin, Ethereum, and altcoins dropped 30 to 40%. The highest rating we ever gave for Bitcoin was that same day. Our Bitcoin went below 4K. Amado said, well, without being financial advice, they basically said this is the highest we've ever had Bitcoin ever. And that was really a perfect dip buying opportunity. And Bitcoin ended up going all the way past 10K, right? And right now, we're not quite there yet. The ratings have not fully turned bullish, right? So we can't really say that by the dip, but I think we can now start to look to see, okay, now things are kind of coming back down to earth. Because I would say the biggest events that happened were YAM and SushiSwap, right? In terms of DeFi. So basically kind of like the biggest events that happened were that told the market that, okay, you know what, maybe DeFi is overvalued and things have to correct, right? Maybe this bubble has to come back down to earth, and then people can accumulate, and then we go back towards the moon, right? So I think it's been a pretty crazy week. Never a dull day in crypto. One question I do have for Bill as well is basically, I mean, what caused this to happen? Because we keep hearing about how crypto and Bitcoin has no correlation with the markets. But I mean, this entire year, I mean, what happens to stocks? When stocks crash, Bitcoin crashes and altcoins crash even more, right? So it seems like this year, in terms of just flight to liquidity and people just trying to get out of risky assets, it seems there's been lots and lots of correlation, right? So kind of my question to Bill, from your perspective, why do you think crypto and Bitcoin in general have been following stocks? We can't hear you, Bill.
So okay. It's that thing you talked about where all risky assets seem to be connected. Because you got to remember, think of risky assets like 4 dogs in a kennel. So you might have stocks, bonds, currencies, and crypto, right? And the way risk management works in the quantitative world, when one dog starts barking, normally all the other dogs will start barking as well. So if you have a problem in one market, it can leak into other risky markets. And the same is true with crypto. Now, in this case, March was all about an oh my God with risk assets. In this particular case, we had a US presidential candidate, give us kind of a black swan, right? Joe Biden travels to Kenosha, Wisconsin, which is a suburban town halfway between Milwaukee and Chicago in the Midwest. Okay. And they have been experiencing some really intense social disorder because it's not a major urban center like New York. So it's a huge shock in that area. So Joe Biden goes to a town hall meeting in this place where violence is occurring, grabs the microphone and says, I can't tell you about my tax policy because you might shoot me. Okay. Now, for somebody to say that, that's a little bit shocking. For somebody to say it in Kenosha, it has to get the market's attention. So the way people interpreted that remark is that capital gains taxes are going up, short-term and long-term. So I better sell out of everything now. So equities tanked, Tesla, all of these stocks fell apart, okay? And then crypto and Ether followed, okay? And we already talked about in crypto how, sort of everyone had the same position everybody was sitting on profits or everyone was already long, and then it just feeds panic. So a lot of times it only takes one small thing, but that thing comes out of left field. And this actually reminded me a lot of what happened in stocks in 1987. I know I was in college at the time.
What happened in 87, Bill?
Okay, well, what happened in 87 was stocks had gone up for 4 consecutive years or 5 consecutive years. I mean, it literally was a giant party. It was the 80s, right? And all of a sudden, after Labor Day, things started to go wrong. And then by October, the market went down 25% in one day, which was
Wow.
unheard of, right? And this was before electronic orders. So my father, who was a broker at the time, told me stories about how the brokers in his office were all lined up to go to the clerk in the wire room, and they all had tickets, trade tickets, stacked this high in line for their customers to sell everything. You had to wait in line to hand in your paper to signal to the exchange to sell everything. Okay. So you can imagine what kind of panic this created. Now, long story short, the market found a way in that case to hurt the most people. The only people it didn't hurt were the value investors. But even in that case, okay, the market went all the way down, it bounced, and then it came all the way back to retest the lows at the holidays. So if you're out there in crypto and you were looking at this thing on Saturday night and you're like, this is the end of the world, this is the end of me, you are not alone, right? This has happened in the history of markets. And one of the reasons why I bring up 87 is because that distress was so serious, right? Like DeFi disappearing over a 3-day period, that it actually formed a generational low, right? So, okay, you may have bought the top or you may have missed the signals. We told our stories. This market hurt everybody, right? Except for the guys who were buying and taking profits at the same, as they went along. But the pain was so serious that I think at least, that this could be like a major low point, right? That we shook the DeFi tree. And if you wake up tomorrow and DeFi's still there, okay, that means DeFi can take a punch, right? I mean, think about Chainlink, right? At Chainlink at 5, it was overvalued. At 20, everyone loved it. And then it went back down to 10 and everyone wanted to short it. You know what I'm saying?
Yeah.
So the way people got twisted around here, and we're here to help. We helped the guys in our Telegram group. We fed them charts all weekend. We're here to help you. And the reason we want to help you is because you're the crypto family, and because things like this, when they happen in crypto, it's way more dramatic, right? Because you can imagine a different capital gains tax routine and how that might affect, say, Bitcoin whales, right? Or people who have been, hodling for a long time. So there's lots of things that can make you nervous, but there's also lots of opportunity. Okay. So that rounds out like what happened, and then say my opinion going forward, that this is an opportunity to get involved. If you missed it, or if you did a trade that didn't work out, or even if you got wrecked, right? If you can recover, take a deep breath and start to maybe reestablish positions, this is the time when hodlers get involved. So that's how I would wrap that all up.
All right. Thank you, Bill. Now, to also kind of reiterate, so one of my favorite value investors of all time, Howard Marks, says, you want to buy from pessimists and sell to optimists, right? So what does that look like? Meaning that the best time to sell was when everything was going up, right? So basically, since the bounce back from the pandemic, right, the best time to sell was on the way up, right? And then this week when everything crashed and we had so many pessimists, so many moon boys, moon girls that turned into pessimists, that was a possible buying opportunity, right? So if you're investing for the long term, I think there are really two things to kind of go about this, right? One, dollar cost average in. Don't just buy everything at once. So whether you're buying every month, every quarter, every week, pick a particular time frame and stick to it, because that removes the emotions of trying to time the market, right? Because if you're going to buy every month, for example, regardless of whether it's going up or down, then that kind of takes out the emotion, right? And then also, when the market is going down, that's actually probably when you want to buy even more, possibly, right? Because that's when things are at a discount, right? Because the best discounts are when things are going down, not when things are going up. The best discounts are when things are going down, which means the best discounts are when there's blood in the streets. So, I mean, even though it's very unfortunate, but that's really the time to go to the bank and get more money. All right. With that being said, thank you, crypto family. It's going to be a great show. Tell us what you think down in the comments below.